Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over precious metals and base metals returns for 1 month. And it's important to look at this stuff, and sometimes you want to buy the leaders, sometimes you want to buy the laggards. And obviously, outperformance in the 1 month or any time frame doesn't necessarily mean that you'll have continued outperformance. So what I'm looking for is I'm just looking to see who's doing well, how are they doing, are they turning up, are they coming back, where could potential opportunities be for further investment. So let's dive in. Let's look at the returns for 1 month, and I'll give you my financial opinion. So here we go. Here's Nova Royalty, Alphamin, which is a tin producer, Copper Bank, NGX Minerals, and Appia Energy Corp, which is a rare earth. And looking at this stuff, I mean, obviously Copper Bank's done very well. That one's shot up quite a bit. Looks like Appia is kind of pulling back. So when I look at some of these things, I would think Appia might be a potential one to look at for watching it because it's pulled back so much. It was up almost 50%, and now it's back to zero. So it's had a pretty large pullback from its highs. And Copperbank's been kind of taken off. So that's something I would look at. Rare element, REEMF, that one's launched higher. You can see this big move higher. MP Materials, I think, is kind of starting to move on up. That might be one to look at if you guys want a rare earth. And then Global Copper and Global X Lithium are down a little bit. But if copper continues to move up, I think this is COPX. I think this could have a pretty good run if we break its downtrend that we're in. Looking further, some of these large, higher dividend paying companies, these are the diversified mining companies, they've gotten walloped this past month, especially the iron ore guys. VALE, it's had a pretty rough time. I don't know if I jump in yet. I would be watching it. And if this is one that you guys like, that would be one I would be looking at. VALE, and BHP Group's another one. South 32's kind of bucked the trend. That's up 16%. Rio Tinto is down, and Norilsk Nickel's down. These are all diversified miners that pay very large dividends that have pulled back quite substantially the past month. I would wait for a bottom, wait for them to kind of come back up, because you can see they're still kind of pulling down here. They're in a downtrend. I have not seen a downtrend break. But those are ones that I would be looking at. We've got, this is GLD, SLV. One of them's Palladium. This is Physical Platinum, Sprott. And this is one of these is Platinum as well. So Platinum and Palladium. Palladium's down quite a bit. I probably wouldn't go into that one. This is the Platinum Palladium Trust for Sprott. That's down. Platinum's starting to put in and strengthen up, so that's one I would definitely look into out of all of these. And looking at these, they're still in downtrends, the GLD, SLV. So I would say Platinum's probably the one that I would look at out of the group. Mosaic you can see, has turned and is moving on higher. Mosaic might be one to look at. It's a fertilizer company. Caterpillar's down, Komatsu's down. Kind of see they're kind of trending lower. Intrepid Potash looks like it's coming up, and we're seeing both Intrepid Potash and Mosaic, which are fertilizer companies, potentially moving on up. Now, we're going to switch gears here and go over to the gold and silver, some of these metals, and some of the mining companies there. Looking at these, we've got some pretty large pullbacks. Discovery Silver, Metallic Minerals, Aftermath Silver, Koya Silver, and Impact Silver. These are all small silver companies, and they're all pulling back quite substantially. Some of them, they're firming up a little bit. Impact Silver's firming up. Looks like Aftermath Silver is also firming up in the way it's looking. Those are two that I would probably look into if you like silver. We've got the royalty companies. They've been getting hit kind of hard outside of Gold Royalty Company. That's moved on up, but the rest have been pulling on back. They're still in downtrends, and I've been trying to pick off some of the bottoms here. EMX royalty looks like it's starting to firm up. That would be one I'd look into. Teuton Resources is also firming up. You can kind of see this turning back up. Looking at some of the larger companies here, larger gold and silver companies, Newmont, Barrick, Endeavor Silver, First Majestic, and Hecla. You can see they all kind of came up, and then they all got sold off at this point here in early September. Late August, early September here, they all sold off, and they've trying to break, but they continue to get sold off. So I would wait. But then we've got more royalty companies on this side of Cisco Gold Royalties, Royal Gold, Sandstorm Gold, Metallo Royalty, and Mavericks Metals. Mavericks is starting to firm up. You can see it kind of ceasing to go down, but the others are starting to pull back. So a further pullback until we hit a bottom and start to turn, I would be waiting to buy a lot of these, but they're all kind of in pullback mode. And these are some of the ETFs. This is the gold mining GD. This is GDX, SILJ, SIL, and GDXJ. And these are the performances. And you can see they're all highly correlated and they're all pulling back. And I'm waiting for a bottom to turn. They're still in a downtrend. So I probably would be waiting and looking for a break of the downtrend before entering these metals. Now, I've been looking at a lot of stuff here recently. And I'm almost like ready to say that we almost have like we're entering an energy crisis. And the reason I'm saying that is, and this is going to filter its way through everything. I mean, it's going to be much higher prices. We're probably going to see shortages of things. But we're seeing natural gas way up there. It's at $25 per MMBTU. And I think we're going to see higher prices just across the board of oil, natural gas, coal. We're running into shortages, and scarce energy is not going to be good for prices. So a lot of these mining companies, an input is energy costs. And I don't know if we're going to be safe in the royalty companies as well, because if energy goes way up and it becomes a lot more scarce, some people are going to have it, some people are not going to have it. Some countries are going to have it, some countries aren't. The input costs are going to be astronomically high, and maybe having the physical metal is the safest way to play it. I'm just looking at prices of like natural gas, and they're rocketing higher. I mean, it's gonna pull everything higher with it. If we have a natural gas shortage, it's gonna pull coal higher. It's gonna pull oil higher. It's gonna pull electricity prices higher. It's gonna pull uranium higher. It's gonna pull everything higher. And I don't know how this is going to get resolved in the short term. I mean, this could go pretty substantially higher. And, I've just been thinking a lot about it. And I don't know about the mining companies, because the mining companies, their inputs are all these energy. I mean, it's a very energy intensive process to extract it, to do all these things. And I was thinking about, I sold out of my solar companies because I was looking at the input costs. I don't know how, if energy goes rocketing higher, I don't know how base metals and other metals are going to stay low. They're going to rocket higher. They have to, because your input costs are going to go way up, and the mining companies aren't going to make any money. And if you notice, there's some companies that are literally shutting down because of energy costs. They're getting squeezed between the metals price or fertilizer price or whatever it is and their input costs. And they're literally they're stopping production. They're stopping their business because they can't make money. It's a weird scenario where, I'm going to be interested to see how this all plays out. And maybe going forward, the world's just going to have higher energy costs in general for a long time. When we go and transition, and I know I'm turning this almost into an energy mix here, which is important because it's mining companies, and mining companies has energy as an input cost. When you kind of sit down and look at this, we haven't gone from a high energy return on investment source to a low energy return on investment source, lower. And solar is lower. So is wind than coal and oil and natural gas and uranium. We don't have any solutions on storing electricity. any good solutions, and they can't be. They're not going to be implemented quickly into our grid. I know a lot of people they think we can just we can do X Y Z. We can mine uranium from the ocean, guys. This stuff isn't fast. You're talking 20 years out on all of these things. We're not going to have solutions in place for a large storage of electricity. These plans that these countries have put through have not been well thought out. It's been absolutely mishandled. People are not thinking, we're just throwing solar in, we're throwing wind into this mix, and there's no way to store it. What you do with natural gas, with coal, is you have these very large, reliable plants that you can hit very steady, reliable numbers day in and day out, and you can store months of inventory right next to it in the form of coal, natural gas, or oil. And they're very cheap and easy to store. Now we have these intermittent producing electricity devices and no way to store it. That's like the worst combination. I'm in manufacturing, and that's what my degree's in. It's manufacturing engineering, and what you want from your processes are stable outputs. If you don't have stable outputs, your process can never be in control. And that's exactly what we did, is we took our entire energy system, which is the foundation of absolutely everything that gets built in this world, and food production, and on and on and on. Absolutely everything energy is involved with, transporting things, making things. And we put this incredibly unreliable power generator in it. So now your processes or your power generation is out of control. You have no control over it. You have no consistency. You have no stability, nothing. And then you have nothing to if you put this unstable power generation source in the mix, you have nothing to buffer it. There's nothing to buffer the ups and downs. This is complete mishandling of the most important commodity in the world. And when you look at investment opportunities, the greatest investment opportunities are where you have these types of things occurring. You have a need in society, one of the most powerful needs that humans need in the world, which is energy, the basis of everything. And you just made it unreliable. This is going to resolve in probably a large energy crisis and much higher prices. That's my guess. And I don't know how fast we can fix it, so we'll find out. And whatever we're transitioning to and what they want to transition to is far more complex than what we have today. That is not a good mix. It's less reliable, it's much more intermittent, much more complex to store electricity, and we're putting in devices, wind and solar and all these other things that are much more complex than the current systems that we have. Complexity will not win if you're putting in massive complex solutions. You want to go with really easy, stupid, simple stuff that is very robust. But that's my opinion. I think that some of these mining companies, they're going to have to figure out how to stabilize their energy input costs. Because if they're coming and they're going all over the place, it's one more thing that they have to worry about on top of their commodity price flinging all around as well. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.